I say delusion is my superpower. Start early and stop looking at it. We made a stall, just illegally, but a little bit down the road on Queen Street.
You've been told your idea is too big. This man moved from countries chasing cricket match and built a company from street stall.
Don't put anyone on a pedestal in your head. Automatically, your brain's going to switch off.
What he found will change how you think about what's really possible.
The Indian market is going to be the only alternative market that anyone will consider to the US.
After this conversation, the word impossible won't mean what it used to.
Everyone will tell you, what if it doesn't work out? What if it does?
Today, we are joined by CEO of Indus Fintech, and young entrepreneur will be breaking down how fintech is transforming access to investment and the real opportunities emerging between New Zealand and India. If you want to understand skills to tap into the startup ecosystem and markets and a bright future, this episode is specially for you. Let's get into it. Let's welcome CEO of Indus, Jay Goradia. Welcome, Jay. Most of the people who are watching in this podcast might be knowing you, but I still believe for few people who are not new listeners.
Yeah, sure. So I'm Jay Goradia. I'm the founder and CEO of Indus. Indus allows people living in New Zealand and Australia and soon the world to invest in Indian markets without needing any Indian infrastructure, bank accounts, documents, or anything like that. We're the only startup of our kind globally that allows seamless access to Indian markets. So moved to New Zealand at the age of 22, worked investment banking for a bit, and then 3 years ago, wanted to invest in India myself. So, said someone needed to solve this problem. So set about trying to do so.
That's nice. That's nice. Okay. I heard about few things. When I doing research about you, I heard you were in Bangalore, you're doing your good life in Bangalore, then moved to Mumbai, watched New Zealand cricket, and they said, oh, New Zealand is my place. I want to move to New Zealand.
Yeah.
Can you walk us through why was that decision and what made you that decision?
But yeah, so at that time, I just completed my graduation from Mumbai. Wanted to do my master's abroad and was thinking about different places to go to. Was watching a cricket match. It was like New Zealand versus West Indies or something like that. And I was at the Mount. And you know how in between, especially in Test cricket, they show you the sights of the ground around and stuff. And the Mount is obviously unbelievable. So, I was talking to my dad at that time and I was like, hey, that's the kind of place I want to go to. That's the life I want to live. The New Zealand cricketers always seemed super nice. They always had this really good sportsmanship and temperament and stuff like that. So I said, that's the kind of people I want to be around. That's the place I want to live in. And so that was it. And started exploring universities. And a few months later, I was here.
What was your relationship with finance? What made you start investing and then becoming a CEO of a fintech?
Yeah.
What was that career path look like?
Yeah. So fortunately, I had the opportunity to work a few internships while I was in my undergrad. Some of them were in investment banks, others were in fund management companies and stuff like that. And over there, I'd learned some basics of what investing and stuff looks like. And one principle I learned very early, which was that staying in the market for a long time is very important. So the earlier you start, the better. So fortunately for me, I'd started off at a very young age and sort of gradually built my portfolio over time. The education part of it helped with it because most people think that to invest, you need some sort of special knowledge or you need to find an edge or something like that. Where I knew because of both doing the internships and because of doing the masters and studying finance, it's that the simpler you are with your investments and the longer term horizon you have with your investments, the better it is for you. So even if you start with a very small amount, it matters how early and how often you are in the market rather than trying to find the exact right thing to invest in.
If somebody in the age of 25 to 35 decided they want to go into this highly rewarding career as an investment banker, let's say I am in IT sector, right? I don't know anything about investment banking, let's say. So if I start tomorrow, how should be my journey look like?
Yeah, sure. For the average person, there are couple of things that you would look for right off the bat. So you want to be good with numbers, or you want to have an affinity of numbers, because you're going to spend a long time with them, right? So if you hate the concept of math or numbers, it's probably not for you. So you've got to be good with numbers. And secondly, and I think this is a very underrated skill, is you've got to be able to tell a story using those numbers, right? If you have these two things, there are only certain skills that you need to know and learn. So let's say you start off as an analyst, your day to day will look like primarily either working on a financial model, which is, purely an Excel, or, if it's more advanced, something like Python.
Is it
But
like a quant
but
thing?
yeah, but no, it's primarily Excel. So financial model is basically trying to get predictive outcomes based on certain inputs and certain sort of metrics that you put in. So if I'm trying to value a company, I look at that company's P&L and balance sheet and their financials, and I try and, based on certain inputs I put in and certain risk metrics I put in, I try and forecast what they might look like 5-10 years from now, and then discount those cash flows to be able to get what you call a DCF valuation, to get a valuation today, or a net present value. That's simply what financial modeling is. And there's different variations of it where, for whether it's options or whether it's companies, there's different types of models that exist. But the most basic stuff you do in investment banking is a DCF model, which is a discounted cash flow model, which is just trying to value a company. And from an investment banking perspective, what I specifically did was sell side M&A. So companies would come to us and say, hey, we need X amount of money for our round. So they wanted to raise capital. We would then help them in a couple of ways. One would obviously be trying to find the value of the company, and hence how much they would be able to raise for the amount they want to dilute. And then going and actually trying to raise the capital by going and finding investors who would be interested. And that's where that second part of turning those numbers into a story comes from, right? So the numbers all make sense in your head, but in order to be able to translate it properly to a potential buyer, or to someone who might be interested, it's very important to be able to make that mean something. And that storytelling ability is very underrated. And if you want to go far, it's that storytelling ability that, will take you far. So to be able to turn those numbers into a nice looking deck, which will tell a really good story of how that company has grown, or where it is at, and what it plans to do with this capital, and what those numbers actually mean, that's super important.
What are some career promising education that we can acquire for this one? Like maybe start as an analyst.
Yeah.
What kind of knowledge they require?
Yeah, so I would say that you can either do a degree in finance, so that's a bachelor or a master's. Accounting, so you can try and get your CA. That'll give you a big edge, because accounting is super important. But otherwise, you can also do another course called a CFA. And a CFA is a course for someone like you described, who is already in a professional career and is now looking to make the move towards the finance side of the world. So a CFA is looked upon very kindly in the world, and also just general affinity with numbers and Excel. So Excel will be your biggest tool that you will use, as well as PowerPoint, but more Excel than PowerPoint. So I would say if you go onto YouTube, you learn sort of simple financial modeling on Excel and stuff like that. That'll give you enough that you need to know. Most important thing is, once you have these core skills, the actual job will help you learn what you need to know, right? But it's these core skills of knowing how to read financial statements, of knowing how to understand companies and what their key revenue drivers are, what their key cost drivers are, and then finally to be able to translate that to a model, and then to be able to forecast that. If you're able to do these things, then you have a very high chance of breaking in.
What was the moment that you thought like, okay, there is an opportunity in New Zealand for tapping into Indian market, and you decided, oh, just not for me. I just wanted to bring into the wider audience, and it's going to help them.
Yeah. Well, I'll take a step back. I didn't think I'm building this for a market. I was building this mainly for me, because it was a problem that I had. So I wanted to be able to invest in India, because that market is absolutely booming. the switch moment for me was I'd been obviously building up a bit of a portfolio of US equities, and it was super easy to invest in the US from here using Sharesies or Hatch or any of these platforms directly using your New Zealand driver's license or passport or your New Zealand bank account. But when I went to India and I showed my father my returns, I was quite humbled very quickly because, I thought, oh, I'm so smart. I have all these degrees and, I'm doing so well in my investments. And I saw my dad's portfolio, and he doesn't really know that much about finance. And he'd invested in like these basic blue chips, and that had absolutely smashed my portfolio, right? And so that's when the light went off that this is the market I have to be in. I have to be invested in the Indian market over a long time if I really want to outperform. I set about trying to actually do it myself, and the process was absolutely ridiculous, broken like in every way. You have to go to India to open a bank account, you have to courier a whole bunch of documents, you have to hire a CA in India to get money out of India, you need all these remittance certificates, tax certificates. It's just super troublesome. And if someone told me that I had to open a bank account in America to invest in America, I would never do it. And most people wouldn't do it. Who's going to open a bank account in another country just to be able to invest there, right? And that was like the moment where I was like, wait, there has to be a better way. The world's capital is going to flow into India. India is, the growth story of this century. Over the next 20 years, it's the most significant capital markets opportunity. It is the only market that has consistently shown 6, 7, 8% GDP growth over the past few years. And that's expected to keep continuing because of demographic and other infrastructure reasons. And in order for me to be in this market, I had to open a bank account. I said, that's ridiculous. As a proposition, that's ridiculous. And so I was more solving for myself. I said, I should be able to invest in India as easy as it is for me to invest in America. And I was pretty confident there were many others like me. And actually, I called a few of my NRI friends and I said, hey, I'm trying to do this. Do you have the same problem? And they said, exactly. And those became my co-founders, Wow. And and that's how, we started off the journey. So it was more trying to solve a personal problem. But yes, very quickly we realized this is beyond a personal problem. This is a problem that everybody has, which was great validation to have. We sort of knew it deep down inside that this is a problem that everybody has. But yeah, it's since then we haven't stopped. It took a long time for us to actually convince regulators on both sides that on the India side that this can be done. Number one, for us to find a way for it to be done, investing in India without an Indian bank account. So we had to fight an uphill battle at each turn to convince people to let us do this. But we persevered and we kept going, and here we are.
That's good. What was your biggest challenge?
Mainly to do with sort of trying to actually do something about this. So at the very beginning, how I started with finding the way was to actually say, I had a hunch that you could do this because you can do it in America. So surely this is how the future looks. Yeah. Right. And we had a hunch that we had a rough idea of the model. I went around and I took the first 2 pages of Google and I said, I need a lawyer to verify this. I have these ideas. I need a lawyer to tell me that it's actually okay. On the first 2 pages of Google, I spoke to every lawyer in India. And every lawyer except one told me it was impossible. So to actually make this a reality, because all the lawyers were like, well, this is never really done before. How is it possible?
Yep,
and there was one lawyer from a great law firm called Trilegal who said, actually, there might be a way, and at that time we didn't have enough money to pay Trilegal, was one of the, and he actually said, you know what, don't worry about the bill for now. We'll bill you when much down the line. I like what you're doing. Let's just work together.
Okay.
And so, and also to be able to convince a bank. So it was like DBS Bank, which took a very early bet on us that said, usually we say no to startups. But what if this time we don't say no? Because they said, what you're doing sounds interesting. So it was these little wins that actually meant a big deal for us. But to actually convince people that this is legitimate, this is an actual way that you can invest in India was incredibly hard. It took us maybe over a year to be able to find that path and to convince people that it's possible and to get those licenses.
If you have $1,000 today, right? And you need to invest in share market, what will be your approach?
So there's a very simple approach that most people can follow. Take your age I'm 30 years old.
Yeah.
Right. So just take 100 minus your age.
Okay.
That's your allocation into equities or stocks or stock-like instruments, like mutual funds that invest in equities also count in that, right? So 70% is equity allocation,
Okay.
right? Because the younger you are, the more risk you can take.
Okay.
Right? If I have $1,000, like you said, I'm going to put $700 of that into either the stock market. Equities are basically just stocks of different companies.
Okay.
Another word for that is equities.
Okay.
So into either the stock market or into equity mutual funds, which are just funds that invest in
Like
stocks of companies.
ETFs and all.
Yeah, sure. ETFs, exchange traded funds, are another type of fund that are just traded on exchange.
Okay.
Mutual funds are extremely common instrument to invest in India. So they have equity mutual funds. Equity mutual funds are the most common types of mutual funds as well. And so I would take 70% of my, let's say $1,000 or $700, and I'd put it into equities. I'd take 20% of it or $200 and put it into debt. So there are debt mutual funds, or let's say some sort of corporate bonds or any sort of debt instrument. And I'd take 10% and put it into an alternative asset class like gold, silver. Let's say if you're big on crypto, then Bitcoin or something like that. Right, and I get this is not financial advice.
Yeah.
I don't claim to be an expert on definitely on alternative asset classes. But what I can say, that 70%, which is a majority of your money, people say, okay, you've told me to put it in equity, but where? Where do I actually put this? What stocks do I buy? For those kind of people who don't actively follow the market and don't want to actively follow the market, for them it's a headache. I just want to invest. I don't want to follow the market. I just want to invest. I want my money to grow, but I don't want to keep looking at it. For them, mutual funds are perfect. So mutual funds or managed funds.
Now that's the Indian market you're talking about.
Yeah, sure. That's the market I know quite well.
Yeah.
So I'll just make it specific to that. Mutual funds are perfect. Now, mutual funds have three major types of mutual funds. There's large caps, mid caps, and small caps. There are other types as well, but let's just keep these three for now for simplicity. Large caps, as name suggests, large companies. Mid caps, medium-sized companies.
Yeah.
Small caps, small companies. So large caps invest in the top 100 companies in India by market capitalization or size. From number 100 to number 250, it's mid caps, which are the mid-sized companies, which are the next 150 companies. And then from 250 onwards is small caps. 250 to I think 400 is small caps. That's the next 150 companies. One thing to remember is that when you are buying a stock or you're investing in equities, you are not investing in some, airy-fairy thing. You are buying a part of a company. So most people who are unfamiliar with finance or investments don't quite understand this concept. Think that it is some sort of gambling thing. When you're buying a part of a company, you become part owner of its destiny. If that company does really well, you are going to do really well most of the time. If that company goes under, your money will go to zero. Right? So you're just becoming a part owner of a company when you're buying a stock of that company. When you're buying a mutual fund, you're not buying, or let's say a large cap mutual fund, you're not buying one company. You are buying a portion of a fund that invests in many companies. Right? So number one, you're diversified. You're not putting all your money into one company or one or two companies, right? Number two, you are not looking to manage that fund. You are giving it to a fund manager who's an expert, right? To manage that for you. And you say, I have, these guys have given this much return. I have heard their name or have some sort of trust in their hypothesis. So I'm going to give them my money to be able to invest into these large cap or mid cap or small cap companies.
Okay.
And we have over 500 different types of funds available on the Indus platform, right? So you can sort of choose 3 or 4 different funds. You can choose one fund. You can choose 10 different funds. Usually you want to choose fewer number of funds to be able to allocate into. And thirdly, and most importantly, especially with mutual funds, there's something you can do called dollar cost averaging or an SIP. All Indians have heard the term SIP. Very few people know what it means. What is an SIP? An SIP is basically, it smooths your entry point into markets. So today the market is very high, or prices of stocks are very high. If you put all your money today, if let's say if you invested all your money today, tomorrow if it corrects even a little bit or it falls even a little bit, your whole portfolio goes down.
Yep.
Versus, let's say if I had $1,000, if I put all $1,000 on day one, versus I put $100 every month.
Like a DCA
Right?
strategy.
Exactly. Dollar cost average.
Yeah.
Exactly. That's exactly what an SIP is, right? What that allows you to do is ride and smoothen out the waves of the market. So whether the market is up or it's down, you get the benefit or the disadvantage equally. So it doesn't really matter to you that much. And finally, the most important principle in investing is that time in the market is more important than timing the market.
Okay.
People try and think this is the perfect time to buy. Nobody knows how to time the market. Nobody, right? Not even Buffett, not even like these great Bill Ackman or these great investors. Nobody knows what the perfect time to enter is.
Yep.
So that's why.
Unless you are a politician.
Yeah, well, that's a different story. Nancy Pelosi is a heck of an investor. I know. But yeah, unless you're Nancy Pelosi or someone of that level, generally timing the market is close to impossible. That's why you spend time in the market. Warren Buffett made 99% of his net worth after the age of 50. Now, he didn't get smart or anything after 50, right? It's just the effect of compounding.
Why should we invest in Indian market?
Okay, it's a great question. India is the most exciting capital markets opportunity in our lifetimes. The reason I say this is because there is no other country in the world of that size that is, number one, growing as fast, that is adding as many people to its middle class, who will then have disposable income, who will then spend money, who then grow the economy even more, who have as much of a young population as something like 7 or 800 million Indians below the age of 35. Now just think about that as a workforce that's coming through, right? And most importantly, we've for the past 10 or odd years, we've had a stable government that is pro-business, that is pro-investment, that really wants to drive the country forward, right? And that's not going to stop. Now, regardless of who is in the government, the general direction of the country is going to be very, very strong. Also, the youngness of the population, they're very hungry for, sort of growth. I don't know when the last time you went to India is, but if you go to like Bombay or, any of these cities now, it is unrecognizable from 5-10 years ago.
True.
Everything looks absolutely different. There are new roads, new bridges, new undersea tunnels and stuff like that. It is amazing to see this transformation of an economy. It's much like China in its 90s and 2000s. In the 1990s, 2000s, where China had that massive, spike of growth over those 20 years. India is in that position right now. Now, with China, there are other issues with being able to invest from abroad, political sort of issues where you're not quite sure of, the political environment. The capital markets have, a sort of different nature of their own. But India in general, from a macroeconomic perspective, so why are all the banks, financial institutions like BlackRock, like JP Morgan, Blackstone Investment Group, Ray Dalio, and so on and so forth, why do they always say when they speak about India that this is going to be the country of growth, right? Because of all these fundamental sort of macroeconomic, let's say, advantages that India has over everyone else. Most countries, are complaining about a declining population. India has a rapidly rising and young population. It has rapid urbanization of its people. It has the highest rate of, electrification of its people. So if you look between 2014 to now, the highest rate of electrification that any country has ever had.
And
right?
One of the largest consumers for internet as well.
Exactly. One of the largest internet. So 5G, sort of what Jio has done for 5G sort of spread in India. All of these factors, along with a rising middle class and a huge consumption base, point to a very, very good future. And usually when there's these many good things for an economy, the capital markets are just a reflection of the economy. So if the economy is doing so well, the companies in that economy are going to do very well,
Understood.
So you want to be invested in the place where the companies are going to do the best, because that means your returns are going to be highest,
Yep.
right? So that's why we are extremely bullish on the India story.
All right. Interesting. One of the question I had always in my mind was, what's the difference between an investment banker and a stockbroker?
Big difference.
Okay.
Investment banking is a term that's loosely used. I can say that the narrow area where I can at least say my experience with investment banking is mostly mergers and acquisitions. It's mostly either a company either acquiring or buying another company, or acquiring a major share or a minor share in it. So that is either capital raising or acquisitions, or two large companies merging. A stockbroker is someone who actually buys and sells shares of companies on the open market, which is a public exchange, on the daily. So, number one, investment banking happens generally in private markets, which is companies that are not listed. Stockbrokers are basically salesmen for publicly listed equities, and they are salesmen who go and actually go ahead and fill orders that are given by either HNI clients or other types of clients. And so, yeah, there's quite a large difference between the two things. So on a day-to-day, a stockbroker will resemble closer to a salesman. An investment banker, depending on your level, let's just say an investment banking analyst, will resemble closer to an analyst type of role, So yeah.
Cool. What kind of revolution do you think Indus can bring into the fintech market?
So New Zealand has this specific type of agreement with India called a double tax avoidance agreement, or a DTAA. What this agreement essentially allows you to do as a New Zealand resident is that you can invest in Indian mutual funds without paying any capital gains tax in India under the DTAA. Right? Which basically means that your investments, from an India perspective at least, are tax free.
Okay.
On an ETF, you pay tax. So that's number one. Secondly, the difference in returns is quite significant, because ETFs are more, there's fewer ETFs, much fewer ETFs than mutual funds. And the most important part of it is, so the returns of these mutual funds are, obviously much higher because they're, managed professionally. And the most important bit of all of this is that you actually have market depth with mutual funds. So for example, I think India's financial services ecosystem is going to grow. 500 million odd people have been added to the UPI and Aadhaar stack over the past 5 or 10 years. There's new bank accounts hundreds of millions of bank accounts have been opened over the past decade. So there's a formalization of the financial infrastructure in India. So I think that the banking and financial services industry is going to grow, but I don't know which bank. I just know at a high level, financial services is going to grow. So I can invest in many types of financial services mutual funds, right? Or healthcare, or infrastructure. So there's a level of targeting and depth that you can have with mutual funds that are simply not available with ETFs, right? Although we have ETFs on our platform as well. So we have both, right? We're simply the bridge that connects the world to India.
Okay, and this,
right? But the tax advantage, number one. Number two is the returns are generally higher when it comes to mutual funds. And number three, the depth available is much greater with mutual funds.
All right. So tomorrow I want to start a fintech company. Let's say I have an idea. What does the process look like? Starting from your tech, regulators, compliance. Maybe you can start from.
New Zealand is one of the easiest places in the world to start a company.
Okay.
Right? Yeah. If you want to start a company, simply, figure out a name, go and do your name registration on the company's office.
Yeah.
And, you can do one day you'll have that. And the next day you can, register with the company's office with very little to your name and just start a company.
True.
But to become a fintech, let's say you're going to handle people's money in some way or the other, the main thing you're going to deal with is regulation and compliance.
Yeah.
Right? So number one, you need to have a very strong understanding of the area you're functioning in and the regulation that involves.
Okay.
Number 2 is you need to have your compliance policies all in place on day 0. Because without that, one of the most biggest challenges that fintechs have in New Zealand is getting a banking partner, right? Because you need a bank account.
Yeah.
You think we thought so too naively that you can just walk into a bank branch and they're going to give you a bank account. That is not how it works.
Okay.
For a
the
fintech.
startups.
For a fintech
Okay.
specifically, that is not how it works. There's going to be a long review of all your policies, of your risk assessment documents, of your AML CFT, which is just anti-money laundering guides, of your customer due diligence, what your processes are, what your policies are, what exact type of business you're going to run, the risks involved with that. There's going to be deep checks on all of these just to open a bank account, not even to start operating, to open your bank accounts, right? So you need to have all these things in place on day 1. And New Zealand specifically has a great regulatory environment. So what I would say is go and talk to the FMA. It is one of the few regulators in the world that will actually talk to you.
What's that called?
The FMA, the Financial Markets Authority. Well, depending on which part of the fintech world you're in, it'll either be the FMA or the DIA, which is the Department of Internal Affairs, or the Reserve Bank of New Zealand. We've dealt with the FMA previously, and they are absolutely delightful. We wish all the regulators in the world were like the FMA, honestly. And lots of people in New Zealand complain about this, and I cannot believe it. And that is a clear sign that they only deal with one regulator, right? If you deal with regulators like around the world, you will know how good we have it here and how friendly and business friendly the regulators actually are. The key thing is the regulators are not your enemies. They want you not to mess up. So go and talk to them. Tell them what you're trying to do. And they will actually guide you on some of the things that can be a pitfall. They won't outright give you advice because they're probably not allowed to. But go and speak to the regulators. Most people are afraid. They think, oh, the regulator will stop them. The regulator is not there to stop you, right? The regulator is there to ensure that business is conducted in a free and fair manner for all the people that you're conducting business for. It's to mainly protect sort of your customers.
Making sure that it's not messing up.
Yes, exactly. Right? So go and speak to the regulators. And I would say that's the most important thing.
If you want to teach our audience client relationship skills, how it's going to be and what it's going to be.
So I have the privilege of being able to be very confident when I'm speaking, because I used to do a lot of debating and model UNs when I was in school and college and stuff like that growing up. So I always couldn't wait to go and interact with a client. Right. And I wasn't super embarrassed or super sort of held back. And that's why I think I generally, when I was in my corporate job, generally succeeded at those client relationships. But for someone who is in a corporate world and wants to succeed in interacting with clients, the major thing I would say is that, number 1, be confident when you speak. Right? This is very underrated as a quality. When people doubt themselves, others doubt them.
Yeah.
Right? Whether what you're saying is true or not. Make sure that you aren't afraid to bring out your thoughts or your points. Most people sort of revert to feeling a little bit of, let's say, fear or shame or whatever, and don't actually bring themselves out. And 3, and most importantly, don't put anyone on a pedestal in your head. Treat them as an equal or a colleague, and you'll be able to think more clearly and interact with them more clearly. But if you put them on a pedestal, if you in your head think this person's here and I'm down here, then automatically you're going to have this fear when you're dealing with them. And so you're not going to be able to think clearly. You're not going to be, and then later there's always that, oh, I should have said this, or why did I say this stupid thing and stuff like that. Because you don't view yourself as an equal. And so automatically your brain's going to switch off.
Cool. We are jumping into rapid round.
Okay.
So we'll be asking questions. You can, whatever comes to your mind, you can just throw it.
Yeah.
Right. What's the best tip that you're going to give to someone who's planning to get into investing?
Start early and stop looking at it.
All right. What's the one skill set that if somebody is today planning to go into financial industry, what kind of one skill set they will be mastering?
Curiosity and pattern recognition.
If you have the knowledge, all of whatever you had all this time, Now, tomorrow you got an opportunity. You woke up as you're 22.
Mhm.
What will you be doing?
I'd start this company. It would be great. Could you imagine pre-COVID?
That's interesting.
Yeah.
What is the biggest free resources that you recommend for the audience for financial modeling?
Oh, just use Claude or GPT, even if you're using the free version.
What prompt? Can you give us a prompt?
You can, I wouldn't say this is free, but it's $20 a month or something like that. But you can use Cowork, and you can literally build
Cloud
a
Cowork.
Cloud Cowork, and you can build a Claude folder and make an Excel file in that, or just get the Excel plugin for Claude,
yeah.
and literally ask questions in English. You don't need super smart prompts. Just ask it the dumbest question you can, and because that's how you learn. Don't try and engineer it the right way.
What habit you changed throughout your career?
I think I became a better listener.
Interesting.
Yeah, that's true.
That's true, actually. What is the one tool you cannot live without?
Claude. Yeah.
Now it's becoming like every day there is a new AI tool coming in. It's like more about how you use it rather than what tool you gonna adopt and right.
Yeah, that's right.
Sorry, we are just moving out.
Yeah.
So when you're hiring people, what's the biggest red flag you see on resume?
Buzzwords.
Okay.
If I can't understand what you did by reading it, then I'm just not going to hire you.
That's
People use words that, hey, I read it and I have no idea what you did over here. Delivered engagement metrics that 10x the process
Blah, blah,
life. I'm like, I don't know what you did. So if you can't explain it to me, who's trying to hire you, then you're not going to be able to do a very good job at actually doing the task, because
true. What's one thing that you see on resume that's a deal?
it's not really a resume, but it's more sort of a character thing. If someone is sort of curated even a little bit to what we were doing, so sort of said, if in their resume or in their cold email to me or whatever, they write that, hey, I'd like to work for Indus because I've done this that fits in directly with Indus. I'm like, you took the extra effort. And also, if they don't use obvious AI language, AI is fine. Use AI. We force all our people to use AI. But if you're putting M dashes and if you're putting,
not reviewing it from
you're not looking at it. It's
I've
lazy.
seen this was like when people put on resumes, they just copy paste. They don't have any clear idea of what they are copy pasting, even though they are trying to compare. Okay, this is my job posting. This is my resume. Can you make it here? At least take out those dashes,
and tailor it a little bit at least. It's so easy now to tailor personalized messages. Yeah, just put a little bit of effort. It's one extra prompt, So
that's cool. So as you are focused on bullish on Indian market, next 10 years, in one sentence, if you want to say, how does the Indian market gonna look like?
10 years from now is 2036. I think by 2030, and this is pretty much most economists in the world agree, India is going to be the third largest economy, right? By 2030. We're already the fourth. By 2030, we'll be the third. By 2036, in 10 years' time, I think the Indian market is probably the best performing market globally. It has been, if you look at the past 15 years or so, it has been the best performing or one of the best performing markets globally. But I think by and large, it will be singularly the clear best performing market globally. Because of this sort of run we're going to go on now. And if you look at over a 20-year period, which is by 2047, which is when India plans on becoming a developed country, I think the Indian market is going to be the only alternative market that anyone will consider to the US. Whether you're Indian or not, it will be the only reasonable alternative.
Interesting. What do you think is the next frontier in fintech space for New Zealand?
There's been conversations around open banking for a long time, as far as New Zealand is concerned. So in that space, I'll sort of go with that trend a little bit. I know it's a safe answer, but I think there's a lot of exciting things that can happen within that. I think payments is a space that I'm very excited about in New Zealand specifically. I know there's been some talks about bringing the UPI system over here. So India implemented UPI because it had the India stack, which is the Aadhaar and the digital identity framework and stuff like that. I think Realme could be a substitute of that, because most people I think here have a Realme.
Yeah.
And if you have some sort of, if you flesh that out a little bit and build a proper digital identity framework that then connects to bank accounts and then phone numbers, you could really have a New Zealand sort of centric rail that you could build, which I think I'm very positive about seeing soon.
Indus is growing like rapidly. It's like magical. If I say that's what I can see, from your confidence from news channels or around New Zealand, right? Whenever I talk to all the startups in New Zealand, some people are saying, okay, there is good opportunity to go in US or Europe or somewhere else. You get bigger investments, bigger market and everything. But you decided to stay in New Zealand and start the startup, like fintech startup. Why?
I think New Zealand, while all of those things are true, yes, the US, Australia, even Europe, all have bigger markets. To start a company, you need a supportive ecosystem. You need an ecosystem that is sort of high trust, that actually enables small companies to be able to, number one, exist, number two, compete, and number three, grow. And New Zealand has all of the perfect recipes that you need to start a fintech. So we often say that we couldn't have started this really in any other country except New Zealand, because no other country would really give us a shot. When you come up with sort of what we wanted to do, it's usually considered either high risk or you're dealing with India or something like that, and people would shut you down immediately. But New Zealand actually helped us get to where we wanted to get. As I've said before, it's the easiest place in the world to start a business. It's the ecosystem surrounding it. Although, yes, there is less capital here, there is less sort of money or customers available here, that the ecosystem around it is so supportive. So we were part of this accelerator program called Creative HQ. And through that, just the positive sum mentality, where instead of trying to pull each other down, everyone's trying to sort of raise the tide, right? Because a rising tide lifts all ships. Which we really found in New Zealand. So for us, it was the perfect place for us to start. Having said that, we obviously are looking to expand to these massive markets. Australia being the first one. So we've just launched in Australia, where hopefully we have a similar, response like we've had in New Zealand as well. The UAE and the US are something we have planned for later this year. So yeah, excited.
That's good. So you mean like New Zealand is very supportive for startups ecosystem, and it's a good testing place.
It's not just testing. I mean, you could build a very serious business.
As like a startup, you can have a stable entry to the market.
Yes, absolutely. And it's a great place to start. It's more forgiving if you make a mistake. Human beings here are more forgiving. Like our customers, if let's say an app had a glitch in it, would actually call us and tell us, hey guys, there's this problem, and we apologize, and they say that's okay. Whereas in somewhere else, you directly see like 1-star review, app doesn't work. We've had a couple of those, but as a company, you need the entire ecosystem to be supportive of you, which in New Zealand, it definitely is. It's just the attitude of the people, I guess. And people talk about this tall poppy syndrome. I don't think that's true. Tall poppy syndrome is a thing that's usually associated with Australia and New Zealand, wherein they want to, let's say, cut off the tall poppy, or they don't want people to rise up too much, and they bring them down a little bit. And either this is true for the entire world, because in India, it's the same thing. We call it crab mentality. In Australia, they already call it tall poppy syndrome. It's a similar thing in most parts of the world.
Yeah.
But in New Zealand specifically, the opposite of that isn't spoken about enough, where how supportive people are, because of there's only 2 degrees of separation. If we ever needed help with anything, like getting somewhere was just like a phone call, say, hey, do you know anyone in this place where we need some help? And they would be like, oh yeah, sure, I'll connect you to another person. And that's very rare. Like for someone to go out of their way to help you, which we got an abundance of, it's very rare. So I'm definitely like a big flag bearer for New Zealand and New Zealand business and its startup ecosystem.
That's cool.
But it does need more capital. That's the one thing it needs. So whether it's from the government itself, or whether it's opening up to sort of global VCs and actually showing off the talent. New Zealand does a bad job about showing off itself.
They like to be in a safe place.
Yeah.
Cool.
Sort of-
Even that, I think that's
be cool, be under the radar,
Yeah.
sort of put your head down and work. But sometimes you've got to let other people know the cool stuff you're doing as well. And we've got some really cool startups over here, right? And some of my friends who are founders have had some issues with raising funding where if they were in any other country, they'd get it like this, just because they have more VCs and the VC ecosystem is sort of less risk averse. The VC ecosystem here is very risk averse, right? And because there's so few, capital to go around.
For somebody who's starting a new company, what will be your guidance for them to get that first 1,000 customers?
Yeah, so the first, I don't think that helped at all. Except in teaching like basic things like resilience and stuff like that. But I think I have a pretty resilient personality to begin with, and I have a little bit of a delusional personality where I think I can do anything, and I think you need that sometimes to be able to start a company. But how do we get our first 1,000 customers? Well, in fintech, the number one thing that everyone is trying to earn is trust. That is the most valuable commodity over anything else. How do you get people to trust you or your company with their money? So for the first 1,000 customers, we did a mix of physically speaking to people, referrals, as well as a little bit of digital. But I'll tell you a bit of a story. So this is about 2 years ago. The big Diwali that happens in Auckland at Outer Square?
Yep.
The BNZ Diwali. At that time, we tried to get a stall, and I think the stall price was either too expensive or we couldn't get it. But we still wanted presence over there because we were about to launch in New Zealand, and we said, okay, we want this physical presence. We want people to know we're real. And what we ended up doing is, because we couldn't get a stall, we made a stall just illegally, but a little bit down the road on Queen Street, where we were constantly hiding from security. So what the four of us founders did is that we would all have like 1 or 2 standees that we got printed out each. And we just go find a corner and we just set it up. We just set up 2 standees on either side. And as people pass, they would think it's a stall because it looked like one. There were 2 big standees and we were all wearing Indus t-shirts and stuff like that. And we were handing out cards. And we must have given out like 2,000 cards that day, right? And just having that human being give them a card and they looked at that and went, and maybe a 30-second conversation made maybe 100 or 200 people think that, oh, this is real. This is real. They're here in New Zealand. This is physical. This is a real thing. So earning that trust was incredibly difficult. We had the good fortune of entering an accelerator program, which also gave us a lot of PR. It was the first 1,000 customers mainly came from that, doing things that don't scale. So non-scalable things like setting up an illegal stall. Funnily enough, this Diwali, we ended up being title sponsors of like 4 or 5 major Diwalis across New Zealand, and title sponsors. To go from illegal stall to title sponsor, where a lot of the Diwalis were called Indus Diwali. So it was like Indus North Shore Diwali, Indus Waikato Diwali, which were these massive 20,000-30,000 person events.
That's awesome.
We could feel it. We could. That was the day when I would look at my co-founders and I go, last year we were on Queen Street illegally, running away from security, setting up illegal stalls, and we're title sponsors over here. So we really felt that in that moment.
That's awesome. That's awesome.
Yeah.
I want to see, where do you see yourself? What's the plan for Indus for next 5 years?
So, as I said, I'm a little bit delusional. So this will sound delusional. But when anyone outside of India thinks about India from a financial perspective, it'll be Indus. And we want to be that bridge between the rest of the world and India. We want to build that financial plumbing or infrastructure between the world and India. We know that there's going to be significant movement of capital between the world and India as India continues to grow. And we want to be the bridge or the rails along which that happens. Right? So Right now, we're live across New Zealand and Australia. By the end of this year, hopefully, it'll be New Zealand, Australia, the UAE, and the US. But beyond that, we hope to be in most major countries around the world, especially ones with big Indian diaspora. And when anyone outside of India thinks about India from a financial lens, wants to do a transaction with India from a financial lens, they will use Indus.
As we are winding up, do you have any advice that you can give to our audience?
Yeah, I would say just to founders in general, like anyone looking to build, not just founders, but just anyone looking to build. I think, and just touching on this delusion thing a little bit, I wear that as a badge of honor. I say delusion is my superpower. The belief that I can do anything, and it's not going to be true most of the time, but sometimes it is true. Everyone will tell you, what if it doesn't work out? You have to constantly tell yourself, what if it does?
Yep, understood.
Right? So you have to have that mindset and belief in your own capability of doing something that, which is maybe outside of there's a Hindi word, I don't know the perfect English translation for it, but aukat, outside of your aukat of being able to do it, which I constantly, even what we're doing now, 2 years ago was completely out of our aukat, right? But we're constantly aiming above what our, let's say, our level or our capability is.
Yep.
And so I would invite people to not put themselves in a box mentally. Don't put these barriers for yourself. Sky is truly the limit for everyone.
Thank you, man. Thank you for your time.
Cheers.
It was amazing conversation with you.
Likewise. Cheers.